Picking up the wrong structure could easily turn your dream into a nightmare. Well, I wish someone had told me this before, but I learned it the hard way. But don't worry. In this video, I'm gonna break down everything you need to know so that you can make the right choice. So stick around to learn some of the useful insights which could save you thousands. And make sure you watch this video till the end so that you know how to ask me questions in a proper manner so that you can get a response. If you are new to the channel, my name is Sandesh. I'm a qualified chartered accountant and I make videos about productivity, personal finance and life in the UK. Now if that sounds good, make sure you hit that subscribe button to be part of my journey to be more empowered and more informed. So let's get started. Let's start with the basics. A sole trader is one-man show. You are your business. The authorities, the tax guys, the banks, everyone sees you and your business as a single unit. All the contracting, business activities, all of those things will be legally in your name, although you can have a specific business name. On the other hand, limited liability company has a separate legal status. It has its own rights, responsibilities and duties. You may own the company, but the company's name would be used for all of the business activities, the contracting, invoices and all those things. Now let's talk about the differences. The first and the most important difference is the liability cap. In the sole trader, your liability is unlimited, which means your personal assets are not protected. On the other hand, in the limited liability company, and as the name suggests, the liability is limited to the assets of the company. Hence, your personal assets will be protected in the form of a limited liability company. Now let's look at an example. Let's say a guy called Rishi Sunak opens up a business and calls it Paneer and Pie Enterprise as a sole trader. On the other hand, let's say another guy called Boris Jones open a similar company and let's call it Bread and Butter Limited. Bread and Butter? Whatever. Now both of them starts a business with the investment of let's say £50,000 and let's say they make their mistake by serving meat to a vegetarian customer. And now customer has gone to the court and claimed damages for £100,000. For both of these, their claim is more than what they invested in the business. Let's say if they sell their business assets today, they could only get £40,000 out of it. Now Rishi would pay off that claim for £40,000 and for the rest of £60,000 he would need to sell off his personal assets like his investment, his property, his car, gold and other assets to pay the claim for full £100,000. But on the other hand, as soon as Boris pays off £40,000, he does not need to pay anything else. He would simply go for bankruptcy of his company, not himself, his company, and the claim will be fully settled for Boris. Now that is what we really mean when we say that the liability is limited in a limited liability company and unlimited in a sole trader. There could be some rare circumstances where the limited liability shield is voided in company, let's say when you are entering into or doing any criminal activities, but that's very rare. You got the idea. The second most important difference between the two structures is the legal and administrative hassle involved. Now Boris would be doing multiple things about his company. He will need to register his company with the company's house. He needs to have a separate bank account. He needs to also get involved a shareholder, a director, a secretary, which he himself can be all of these three. He needs to submit reports on a regular basis to company's house, reports like annual financial statements, confirmation statement and other things. He needs to submit 2 tax returns to the tax authorities, one for the company and one for himself. And he also needs to get enrolled for a payroll scheme for monthly RPI submission if he plans to give himself salary out of his company. Now Rishi simply can start his business as soon as he is operationally ready. All he would be doing is just submitting his self-assessment tax return by the end of the tax year. By the way, if you're looking for any professional accountant who can take away all that hassle for you, I'm gonna leave a link below where you can complete a short form and I will give you some names of the recommended accountants who you can use for that purpose. The next difference is privacy. When it comes to company, your income, your expenses, directors' details, shareholders, secretaries, most of these information are part of public record. So there is no privacy. But Rishi does not need to report anything publicly. His operations are not part of any public record. Now let's look at the costs involved. Now Boris would be paying some money to get his company registered. His accounting expenses are also going to be doubled because he is maintaining two sets of accounts, one personally for himself and the other one for the company. And then there are also additional charges as and when he reports any, let's say, confirmation statement or anything else to the company's house on regular basis. Rishi, on the other hand, does not have these additional costs involved. If you are enjoying this video, smash that like button and subscribe to my channel so that you can fuel my passion to bring more useful stuff for you guys. The next main difference is credibility. Officially creating a company in company's house can increase credibility of your business. Even if your business is one day old, it implies that the business is more robust, more stable, and more professionally managed if you are registered with a company's house. Now you may start as a sole trader, but at some point in time when your business grows, you might need to mandatorily convert from sole trader to a company structure, simply because most of the suppliers and big customers only deal with companies rather than sole traders. And that is the case especially with investors when you are trying to raise capital for your business. Last and the most important difference is taxation. Now I can keep talking about it for hours and hours, but this is probably something which requires a dedicated video. But we're going to discuss this at a level enough for you to understand the main difference between the two structures in terms of tax implications. And after watching this section, if you feel that you need a dedicated video, please let me know in the comments below and I'll make one. Rishi will be taxed on his business income, less allowable expenses, and national insurance, whereas his company will be taxed on the company profits, less expenses, including salary expense which the company pays to Boris. And Boris himself would be paying tax on his salary income and any dividend he takes out of his company, and potentially national insurance. Now Boris can be more creative here by exploiting the legal loopholes and reduce his tax liability by deciding how and when he pays himself in terms of salary and dividend. Now just to give you a taste of it, Boris can spread his income across the tax years by simply delaying his dividend income and avoid paying higher tax rates. And if Boris taxes his salary just below the national insurance threshold, he can actually avoid paying national insurance as well. Now hear me out. If he does not plan his salary accordingly, he would end up paying national insurance twice. Once in his company as an employer and the second time himself as an employee. So it is important that he plans out how and when he pays himself salary and dividend out of the company. I have only scratched the surface here, but you got the idea. If you need to learn this in more detail, please leave that in the description below and I'll consider creating a dedicated video on it. Alright, if we take a step back, we can see that when it comes to legal and administrative hassles, costs involved, and privacy matters, sole trader is the better option. However, when it comes to the credibility, tax concerns, and limited liability, the company structure is more beneficial. So hopefully this comparison helps you make the right decision for your business. Now if you have stuck around so far, I thank you very much for that, and I'll give you exclusive right to ask me any question by simply using hashtag #AskSandesh, and I will prioritize answering your questions first. I hope I was able to help today. If you enjoyed this video, give it a thumbs up, and as a token of appreciation, don't forget to subscribe my channel. It is free for you, but it is very valuable for me. Thank you so much. I'll see you in my next video. Ciao.